Good evening, I'm Giuseppe Basile. I'm the analyst actuary. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. Good evening. Today is Sunday, March the 2nd, 2014, and it's 22:11 p.m. And in this video, I'm going to review for you gold. This video is the second video of the series of a few videos I'm going to provide to newsletter subscribers every weekend. So let's start from gold daily here, which is on the screen. This is the daily chart of the E-mini futures contract, continuous contract, aligned to 2014 April expiration. And those who follow me know that I've been looking at the sequence of measure move higher for this market since the beginning of the year 2014, and we had the first measure move participation at 12.14. It could be traded and timed on the 15 minutes with price moving into 12.62 first target, and the price couldn't make it to the second target. So again, we traced from the lows of this measure move to highs, and price was able to respect the 61.8 level here, 1236, and price started fund participation at funding participation at 1244, and this could be timed too using the fiscal technique on the 15 minutes, and we saw price this time going up into 1291 and 1315, and at that point I've been also looking at the all the way halfway back of the weekly move here, and I'm going to show you this on the daily chart. But this was the trace from highs to lows, and as we could see here, there was a breach of the 1337 level, which actually flagged a potential retrace into the next level of support, and this level of support would actually be 1264 here, considering the new highs we had. So I'm going to remove this line. We know we have supported 1264 on the daily time frame, and we also know that eventually price will need to retrace into this all the way halfway back here, which never traded so far. The based on new highs, we need to see 1311 trade here if we actually want to see a continuation higher. In order to continue higher, this market should have support on the daily and weekly time frame. If we move below 1303, so below 1302, we have a support at 1264. So based on this view, last week I have recommended a trade short on the 240 minutes. I want to show you that trade. So of course this market opened with a surprise high, a gap high here. It's not very common in future, but it is what it is. So this is the risk of doing trading, and the risk of doing business. And last week we had this measure move, highs to lows, based on the fact that we are going to see a retracement into the level that I've showed you before, and I'm going to trace that level on 240 minutes chart here, and this is what we have to look at. This level 1310, 1311 never traded, and that's where we have the next level of support for this market. So last week we traded and timed the 1333 on the 15 minutes, and the market started moving lower, and it was well on its way into this 1316 target. We got this surprise at the open, so this gap up, which is not very common, but clearly brought a target, brought, sorry, a trade that was in the green, and where you could have removed half of it at T0, the first target hit. So he brought actually a trade which is probably losing now one time the risk. I'm not convinced this move is going to continue higher, but that's not a good reason, and the stop would have been hit here well above this level of highs, and so at 1339 this would have been actually represented another alpha for risk um, loss here, and this is what it is. We have to take it. Not a problem though, meaning that we it's important to follow the rules, and eventually those rules will actually will actually provide very good results. This is the measure move we were timing on this time frame, and actually this market could be timed in different ways, and there was a sequence of measured move here which was identified and brought price into first target. The next level, the next sequence on this move higher in order to time the market would have been this, and with market actually hitting the highs and then failing the next measure move. This would have been one of the ways to model it. So by having the price above the red line 1336, you could have timed this market and enter on a breakdown below 1332.48 here, and you would have again a risk-free trade here. As we said, we got this move higher here. We still need to retest the 1264, and before that we'll need to test the 1311, which corresponds to the next extension measure move on the daily. No support from program trading if we don't retest this 1311, although we get this move higher. This could just be something that fades out during the day. And an important level to watch for a continuation on the upside is the lows to highs here, and we will need to see whether we will see participation at 1332. So if this is the continuation higher here is real, we should get a participation at the 1332. Not something that I would actually trust, as we still have to see lower price, but that's what the 240 minutes is showing us. So it's something that if it can be timed on the 15 minutes, and I'll time this for you tomorrow and show you in the next video, then it's something that we could trade, and it could continue to bring price higher here. Before or after, we will need to see a retracement to the next extension, daily extension, all the way halfway back, which at the moment are respectively at 1311 and 1264. I hope this helps, and I wish you a very good evening and a great trading week next week. Don't lose the next few videos I'm going to do on the Japanese yen, major forex, as well as the other major forex I follow. So thanks for watching. Bye bye now.